So we can see right now across the board, we got some green, we got some red, but good old Bitcoin is showing us what it's good at, and that is going down after making pushes to the upside. So right now, there's two ways to look at this. We could look at this symmetrical triangle here, or we could suggest potentially that there is a bear flag forming right around here, very similarly to the last one that we saw up here. All we have to do, we take that, we plonk it there, we take this, we plonk it there, and you can see we have a very similar pattern playing out. So depending on how you look at it will depend on how you want to play this current market. I still have my trade open here with 19,500. You might be saying, well, Conor, that was about the same you had yesterday. Why are you not closing out this trade? Well, I've already closed half of this position. My entry, 62,700, I think is very nice. Now, if the price comes down to hit that, I'll get stopped out. I'll lose this money. Doesn't matter because I've already taken profits. Now, the reason why I'm not taking more here is because I still think my base case is, yes, we're going to go lower in this bear market, just like we have in every other bear market. However, we are yet to see a proper move to the upside. The 200-day MA sits at about 95,000, as we can see from this chart right here. And I still think we could push up to there, get rejected, and then head down lower. But remember, if a lot of people are thinking that might happen, we might get either a further push to the upside before a rejection or not as high. Both of those would result in the people taking the opposite side of the trade making more money. So remember that and plan for it. If we move and start to break probably around 77 or even 74 here, I'll probably take some more profits from the trade around that way, and then using that cash to buy the dip as we go down. Though if we do take a look at more data here, there is a good thing I want to show you, right? We can see now, if we do take a look at the data here, this is the worrying side of things for the short term. So this is Bitcoin's exchange liquidation map. We can see right now there are quite significantly more longs in the market. Now, we know what that means. We mean that if there's manipulation, which I think we can categorically agree there is, the likelihood of us pushing to the downside to get rid of those longs is very high. Now, we've already started to see the start of this. And remember, if we are in this bear flag, it could be that we come all the way as low as 66,000 before making our next move to the upside. Maybe even wicking below this bear market bottom here. You can see somewhere around there, maybe wicking below it, depending on if you want to count candle bodies or the wicks of the candles. But likelihood of us even coming down, wicking down, getting rid of as many of the long positions as possible before allowing it to go up is very likely. Now, all of this might sound to you like I'm saying, well, anything could happen. We might go up, we might go down. But guys, I'm afraid that actually is the case. And anyone who tells you otherwise, right, who doesn't put their thesis to you and who doesn't say that they could be wrong is full of hot air, full of nonsense, and I would discount what they have to say. Now, that's up to you. Me personally, like I said, my base case, short-term pump, then longer-term move to the downside, and then we go into the next bull market. Why do I think that? Because that's exactly what's happened in history, so why would I go against that? However, every time in history, even in the bear markets, we get significant moves to the upside. In 2019, we had a 300% move to the upside for Bitcoin. So I'm going to catch those bounces to the upside, right? Hopefully take profit and then use that profit to buy more Bitcoin. That's my crypto market plan right now. Now, moving into the news, we've got more geopolitical tensions rising at the moment, which is making oil act crazy. We just had US officials confirm that Iran has laid sea mines in the Strait of Hormuz, the narrow waterway carrying 20% of the world's oil supply. This is why oil right now is accelerating. According to Bull Theory, this could push prices from $150 to $200, crashing markets worldwide. The strait is 21 miles wide at its narrowest, but only 2 miles are used for the shipping traffic. Iran has estimated 5,000 naval mines already. Apparently, if they drop a few hundred into those 2 miles, tanker insurance rates spike, oil companies reroute or halt shipments, 20% of the oil supply gets choked, price surges on risk alone. Markets don't wait for the detonation. So this could turn into a bloodbath for the stock market and make oil absolutely rally. But we also have oil jumping now 6% in 90 minutes, reaching $94 on reports of oil tankers potentially being attacked, right? Futures down for the NASDAQ, Dow, S&P, and Russell. Russell down 1.64%. Russell is the lower cap stocks. Of course, they're going to continue to get hit. Now, in a moment like this, guys, it's easy to panic, it's easy to be worried, and it's easy to stress about what might happen to your holdings, to your stocks. If the S&P 500 drops off a cliff, most likely Bitcoin will also follow it. And then people will say in the comment section, S&P 500 goes up, Bitcoin goes down. S&P 500 goes down, Bitcoin goes down. This is so unfair, and yada, yada, yada. And yet, these people must have only been in Bitcoin's market since October 25, right? We're barely halfway through this year. We're not even, a quarter or whatever through this year, right? Bitcoin has just gone up for 3 years since the bottom of the bear market, from 22 to 25. It literally has just gone up, right? So no, Bitcoin doesn't just go down, but in a bear market, it does go down just like it has here. And these bear markets, they last for approximately 1 year. Now, when I say that, I mean the downward momentum. People always refer to the high, to the breaking the high, as the bear market, right? This is a common misconception in my opinion, but you can see November 21, we hit all-time high, 69K, which is exactly where we are right now, right? We then spent, now this is the interesting point, right? This is the best time to buy Bitcoin under one very important caveat. If you buy it today, you should buy it tomorrow. And the further it goes down, the more you accumulate. Using, for example, supplementary income every month that for some reason people say is unlimited. It's not, it just comes at the end of the month when you get salary. It's extra income you put into a market you can afford to lose. I believe the best way to navigate these markets is have a diverse portfolio. Property, stocks, crypto, gold, whatever you want. Make it diverse. And of course, guys, hopefully I provide some value, and I'll see you in the next one. Peace.